Welcome to a special segment from the New York Stock Exchange. I'm joined by the CEO and founder of Liquidnet, Seth Merrin. Seth, it's great to have you here today.
It's great to be here. Thanks for having me.
Well, at a time when political headwinds are affecting market sentiment, it's great to have you here. You are the founder of Liquidnet Holdings. It has been around for over a decade and a half, so you've seen how the market has changed and how people trade.
Yes.
Now, given that Liquidnet is also a dark pool operator, you get a really good idea of trends out there. So what are you seeing in terms of the bigger picture?
Well, it depends on exactly what we're talking about. So, from an institutional perspective, Liquidnet is it's a global community of the largest asset managers on earth. And we connected them all into one community where they can trade large blocks of stocks and bonds among themselves. And we're here to solve the problem that the institutions have in terms of their assets have grown so large. Every time they go into the market, they move the market. And that has resulted in a tax on all of our returns that is about $100 billion a year, according to the consultants and the analysts out there. So from an institutional perspective, they are looking at how they can actually move money across the globe more efficiently. And that's something that we address. We're operating in 44 different markets. Going from a country even as large as the United States with so many opportunities, we have about 5,000 public companies in the United States. But if you take a look at the global perspective, there are about 40,000 public companies. So by opening up all of those opportunities around the world, hopefully we can enable our customers, which we call members, the ability to outperform the benchmarks.
Mm-hmm. And Seth, you recently came out with a book called The Power of Positive Destruction. Now, when you hear that title, you might think that there's a negative connotation given the destruction part.
Right.
But given trends in business, you've been through plenty of business cycles. Why is destruction important?
Well, positive destruction is very important. Regular destruction, I think people know all too well. But positive destruction is about breaking down all the barriers, breaking down everything that we know. People are frequently and often constrained by what they know, constrained by what has been done before, constrained by what has not been done before. So frequently the best result is breaking down all the walls and building something brand new where it wasn't before. The analogy that I use is that of remodeling a house versus building one from scratch. So if you remodel a house, you're constrained by the foundation, by the walls, and you could build something that's incrementally better, which is fine and that's great. But if you raise the house completely, then you have no constraints and you can build something that's completely different. So if you really want to completely disrupt an industry, I think that you have to break down all the walls and you have to look at it from a different perspective. So Liquidnet, and in the book, there are tips that I provide that help people understand where to look and how to look. Liquidnet was a $100 billion a year problem that most people in the industry simply looked at as a cost of doing business because the problem had never been solved. Therefore, perhaps it was unsolvable. Being able to solve that problem could result in a fantastic business. So there's a whole chapter in the book called WTF, which is the WTF moment. If you take a look at in your industry, in your company, and you say, why is it being done that way? That perhaps might be the seed that you need for the great idea to solve a big problem, again, in your industry that perhaps could be about positive destruction of that industry.
And May is a time when college students graduate from university, and entrepreneurialism is becoming very trendy right now. But it's not so easy to be an entrepreneur. So what advice do you have for young students graduating right now?
That's a great question. So the whole book, The Power of Positive Destruction, is a whole book of strategies that I condensed and I wish that I had when I started out. I started my first company when I was 24 years old. And I made all these mistakes, and the book is all filled of with the mistakes that I made and strategies on how to do better. So there are lots of tips in the book. One is that all too often somebody comes up with a strategy that says, okay, let's take the furniture industry. The furniture industry might be $1 trillion industry. If I get 1% of it, I'm going to be a huge company. That's not a business plan. That's not a strategy. In the book, I talk about what is your unfair competitive advantage. And the unfair competitive advantage is your advantage that you should create an elevator pitch that's so compelling and so succinct that when you approach somebody, a prospect, that they would be absolutely stupid not to buy your product or service. And if you haven't achieved that level of unfair competitive advantage, I say go back to the drawing board and try harder. Before you start spending your money, or before you start spending anybody else's, certainly.
Well, Seth, while I have you here, I do want to ask you about what we're seeing in the fintech industry. You do bring a wealth of information, and there has been talk of whether or not we are in a bubble. But given everything that's happening in the space and all the investment, what do you expect to see?
Well, I know that in 2012, the venture capital investment in fintech was about $2.5 billion. And between 2015 and 2016, it was about $40 billion. So I believe that that could indicate a bubble. And I think that rightly so. A lot of people were pouring money into fintech because of the regulatory environment, and the banks were getting hammered, and there was lots of opportunity for fintech, and there still is. It's just that at that level of investment, you would expect that most would fail, and some would be hugely successful. There's no question that the financial services industry, global banking, is ripe for disruption, ripe for disintermediation, ripe for good fintech to come in and take over and make things more efficient. The question always is who's going to be the winners and who's going to be the losers. And unfortunately, the way that venture capital works is that when one company has been successful, as we saw with the lending platforms or the payment platforms, there's so much venture capital that goes after it. There's another 500 companies that are similar to that one successful that get funded. Clearly, not all of them are going to be successful.
Well, Seth, thank you so much for joining me today, and I appreciate all your insight and advice for our viewers.